Did you know? The cannabis industry is growing exponentially as an increasing number of states legalize its use to various degrees. Sales are estimated to exceed $30 billion in 2022, prompting some financial institutions to transform their traditional methods to avoid losing high-worth clients while capitalizing on the growing revenue opportunities. The challenge at hand? How do banks and credit unions comply with conflicting legal requirements? Especially when some players like Visa and Mastercard have barred their networks from being used to support cannabis-related payments. While some states have legalized cannabis in certain situations, its use, distribution, and sale remain federally illegal under the Controlled Substance Abuse Act, meaning any money tracked to state cannabis ventures can be seen as money laundering, posing significant regulatory and legal risk to a bank or credit union. What makes the situation increasingly cloudy is every entity of the cannabis industry supply chain is scrutinized, from vendors and suppliers to growers to retail outlets and even employees. Each dollar must be tracked, and then these types of indirect ties make it increasingly difficult for banks and credit unions to identify such relationships to comply with legal requirements. The result? An unsafe environment for an exploding market, as well as unique challenges for banks and credit unions who are faced with fulfilling the needs of their communities while juggling contradictory federal and state laws. Many legislators, regulators, and cannabis advocates have called to light the alarming public safety issue presented by cannabis-related businesses being forced to operate as primarily cash-only entities. This has made them prime targets for burglary, armed robbery, theft, and other property crimes. The vast number of cross-industry lobbying efforts alone point to the urgent need for industry reform. In the meantime, as more states legalize the production, sale, and use of cannabis, it's imperative for financial institutions to make risk-based decisions on whether they are going to offer services to marijuana-related businesses or MRBs, and if they are, to what degree. The main consideration for operating in this space revolves around risk management and compliance. In fact, there are currently several small to mid-sized credit unions and FDIC-insured banks across the U.S. currently capitalizing on the opportunity to leverage their risk and compliance departments to meet the demand for cannabis banking services. Before getting into business with an entity operating within the cannabis industry, you must first determine whether they are a prohibited business or activity by your regulator as well as your board. You also want to make sure they are noted on your list of approved business types or activities. If you decide to offer services to state-approved cannabis-related businesses, you then need to decide your risk appetite. Will you service growers, processors, retailers, or testing facilities? Will you conduct business with cannabis-related organizations like an insurance company, payroll processor, or security company? And then, what types of services will you offer, such as wire, RDC, ACH, or merchant services? Once all that is determined, it's time to chart your course for navigating the legal landscape. Think BSA compliance, customer due diligence, SAR and CTR filings, OFAC and Patriot Act requirements. FinCEN offers guidance and specific requirements to consider when enacting a cannabis banking program. Specifically, the 2014 FinCEN Guidance on BSA Expectations regarding marijuana-related businesses explains how financial institutions can offer services to MRBs while complying with BSA obligations and offers information on assessing the risk of MRBs and conducting customer due diligence. FinCEN also requires financial institutions to verify the business is licensed and registered, review the MRB's state license and supporting documentation for accuracy, obtain information about the business from state licensing and enforcement agencies, determine normal and expected activity for the business, including the products it sells and to what types of customers, continuously monitor for suspicious activity, refresh information obtained as part of customer due diligence on an ongoing basis as part of its risk management program. The key element for a successful cannabis banking program is effectively managing risk. Auditors will be looking for strong, well-documented policies and their implementation, along with appropriate procedures and controls. It is of utmost importance for a bank or credit union operating in this space to have clearly defined Know Your Customer or KYC requirements, data validation and verification practices, client onboarding procedures, and ongoing risk assessment practices. You'll also want to consider providing separate reports to your board related to these high-risk accounts, as well as the potential need for additional staff or technology to automate much of the BSA AML process and regulatory compliance efforts. As I mentioned earlier, the cannabis industry is projecting massive growth over the next several years, and an abundance of service providers, fintechs, consultants, and ancillary businesses are emerging each day to help support the ecosystem. Particularly in states with legalized medical or recreational cannabis programs, it is important for financial institution executives and board members to evaluate the high-risk, high-reward market in their communities, drafting plans, policies, and procedures for how the bank or credit union plans to serve the industry players or not. It will be something regulators will be keeping their keen eye on. Seem all too hazy? We hear you. EPCOR will be participating at the PBC conference in DC to participate in the ongoing cannabis discussions with all kinds of industry participants, from legislators to lawyers to bankers. If you have questions about this space or electronic payments in general, reach out to us by phone, email, or website chat.